Japan, a rising sun in the east, an economic powerhouse filled with technology and financial prowess. But how did one Japanese housewife spark a culture of change? How did Mrs. Watanabe make an impact in the financial world? Today at FinanceSpur, we'll learn about the story of Mrs. Watanabe. But for more videos about finance, technology, and business, don't forget to hit that like button and subscribe. In July 1999, within the hype of the new millennium, the dot-com bubble, and the debut of the euro, a silent revolution began in Japan. This revolution would reshape global finance in unforeseen ways. In the middle of these global events, a group of ordinary Japanese housewives, dubbed Mrs. Watanabe, embarked on a journey into currency trading to secure their family finances. Their weapon of choice was the carry trade strategy, where they borrowed low-interest yen to invest in higher-interest foreign currencies, profiting from interest rate differentials. But this strategy, while profitable, also came with risks. So how did Mrs. Watanabe get there? Japan's economic landscape was really different in the late 1980s. This was marked by a booming economy that ranked second only to the colossal United States. However, the 1990s brought a collapse of Japan's real estate and stock markets, triggering an economic crisis known as Japan's lost decade. In response, the Bank of Japan lowered interest rates, attempting to stimulate the economy. But even with low interest rates, the Japanese economy struggled, prompting ordinary Japanese housewives to search for better investment options beyond their home country. This search led them to the world of foreign exchange or forex trading, where they could trade currencies and potentially achieve better returns. The carry trade strategy became their focus, involving borrowing yen at low interest rates and investing in higher interest foreign currencies. This strategy made profits, but the Russian financial crisis of 1998 exposed the risks inherent in carry trades. Aside from the carry trade strategy, day trading also emerged as a fresh avenue for Mrs. Watanabe and retail investors to engage with financial markets. Empowered by technology and learning resources, day trading offered them more control over their investments. While economic challenges in Japan and initiatives like Abenomics, Mrs. Watanabe's activities in the financial markets drew global attention and sparked discussions about their impact. But something was looming over the distance. A storm was coming soon. One of those problems Mrs. Watanabe faced was the quantitative easing that the Japanese government implemented. So, what is quantitative easing? Quantitative easing, or QE, was a strategy Japan used to fight deflation. This approach involved injecting new money into the economy by buying government bonds. This had a big impact on Japan's economy and also influenced how regular people, like Mrs. Watanabe, made financial choices. Now, QE aims to boost the economy by increasing the money supply. This led to lower interest rates, making borrowing and spending more attractive. The goal was to counter deflation and promote economic growth. However, this policy affected Mrs. Watanabe and other individual investors. With lower interest rates, traditional ways of saving money became less profitable. Mrs. Watanabe had to look for new ways to grow her wealth. The extra money from QE also changed how Mrs. Watanabe traded. The availability of more money in the financial system caused market shifts that affected her perception of risk and reward. This encouraged her to explore different investment options and diversify her portfolio. Overall, QE not only impacted the economy, but also changed how regular people manage their finances, showing how economic policies can shape individual decisions. Another storm that was coming was the 2008 financial crisis. Now we all know what happened in that year. The housing bubble collapsed and whole economies were destroyed. But the crisis also showed something. It showed how all the money and economies around the world are connected. Just like when one person sneezes and it spreads to others. Financial problems in one country can quickly spread to many others. Mrs. Watanabe learned this lesson the hard way. When the financial crisis hit, it was like a huge storm, and everything got mixed up. Mrs. Watanabe and people like her faced big losses. This made them realize that even though their strategy seemed good, there were big risks involved. The crisis was a big wake-up call, showing that even smart strategies can go wrong when the whole world is shaken. After that, we haven't heard much from Mrs. Watanabe or anything like her. But despite the challenges, the Mrs. Watanabe phenomenon showcased the power of individual participation in financial markets. These housewives, armed with personal computers and determination, challenged the traditional notion of who could be involved in high-stakes financial activities. Their actions also highlighted the influence of retail investors on currency exchange rates and financial trends. The phenomenon marked a period of resilience, adaptability, and the potential for unexpected actors to impact the complex world of global finance. The enduring legacy of Mrs. Watanabe serves as a testament to the evolving landscape of finance, which is continually shaped by technological advancements and the ever-changing dynamics of global markets. As technology continues to advance, individuals now have unprecedented access to information, tools, and platforms that allow them to participate in financial activities that were once the domain of large institutions. This democratization of finance empowers people to engage in trading, investing, and decision-making that were previously reserved for experts and professionals. Furthermore, the unpredictability of financial markets is a constant reminder of the significance of individual participation. The world of finance is influenced by a multitude of factors, including economic events, political developments, technological breakthroughs, and social trends. These variables can lead to sudden shifts and fluctuations in asset prices, currencies, and markets. In this dynamic environment, individual investors like Mrs. Watanabe have the potential to play a significant role. Mrs. Watanabe sparked a revolution in which not only big trading companies can participate in the world of finance, but also individuals. With the right tools and knowledge, everybody could be rich. But big companies like BlackRock are continuing to make an impact, investing and acquiring companies here and there. How did they do this, and can they be bigger? Check out our other videos to learn more. But don't forget to subscribe and click that notify bell for upcoming videos. For now, this is FinanceSpur. Have a great day.